Most people have no idea that one of the most important economic stories unfolding today isn't happening on Wall Street, inside central banks, or even in the latest inflation report. It's happening inside a metal that most investors barely think about: silver. For decades, silver was often overshadowed by gold. It was seen as gold's cheaper cousin, a speculative asset that occasionally surged during times of uncertainty and then faded back into obscurity. But that perception is becoming dangerously outdated. Because here's what's really happening behind the headlines. Silver is quietly becoming one of the most strategically important resources of the 21st century. It sits at the intersection of energy security, artificial intelligence, electrification, national defense, and monetary uncertainty. And few people understand the chain reaction that could unfold if current trends continue. This isn't a story about a single commodity. It's a story about how modern civilization itself is becoming increasingly dependent on a metal that is getting harder to produce. Think about it. Every solar panel, every advanced electronic device, every electric vehicle, every data center supporting artificial intelligence, every modern power grid, they all need silver. At the same time, global governments are running enormous deficits, debt levels are reaching historic highs, and geopolitical tensions are forcing nations to rethink their supply chains. Most investors are looking in the wrong place. They're focused on stock indexes, interest rates, and quarterly earnings reports. Meanwhile, a structural imbalance has been building beneath the surface for years. Today, we're going to connect the dots. We'll explore 6 major insights. First, what's really happening in the silver market. Second, why the supply side is far more fragile than most people realize. Third, why industrial demand is exploding. Fourth, what history can teach us. Fifth, why smart money is paying attention. And finally, what all of this could mean for ordinary people trying to protect their purchasing power in an increasingly uncertain world. Because this isn't about predicting the future, it's about understanding the forces already reshaping it. Let's begin. Here's what most people don't realize. The silver market has been operating in a structural deficit for multiple consecutive years. According to the Silver Institute, industrial demand reached record highs while supply has struggled to keep pace, creating persistent shortages. Think of the global economy like a machine. Silver is one of its essential lubricants. When the machine grows larger every year but the lubricant supply barely increases, stress begins to build. Mainstream media often misses this story because silver is relatively small compared to oil, stocks, or bonds. Yet its importance is enormous. A single disruption in mining operations, transportation networks, or industrial demand can create outsized effects. This isn't a sudden crisis. It's a slow-moving structural imbalance, and that's precisely why it's dangerous. Many shortages happen gradually before they become obvious. Then suddenly, everyone notices at once. We've already seen signs of governments becoming more sensitive about strategic resources. India recently imposed restrictions on silver imports to protect its currency and foreign exchange reserves, demonstrating how governments may increasingly intervene in critical commodity markets. This isn't about panic. It's about understanding vulnerabilities before they become headlines. And if you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly. Now let's talk about the supply side. Imagine trying to fill a swimming pool while someone keeps turning off the hose. That's essentially what's happening. Silver mining faces several challenges simultaneously: declining ore grades, higher energy costs, long permitting timelines, environmental regulations, political instability, and underinvestment. What's fascinating is that roughly 3/4 of all silver isn't mined from dedicated silver mines. It's produced as a byproduct of copper, zinc, lead, and gold operations. That means even if silver prices rise, supply cannot rapidly respond. Mining companies don't simply flip a switch. Major producers like Mexico, Peru, China, Russia, Australia, and Chile all face unique challenges. Some face declining ore quality. Others face rising labor costs. Others face geopolitical risks. Building a new mine can easily take 10 to 15 years. Meanwhile, global demand evolves much faster. The Silver Institute estimates that global mine production remains below its 2016 peak despite years of rising demand. This creates an uncomfortable reality. Modern civilization is accelerating consumption faster than mining infrastructure can expand, and unlike software, you can't simply download more silver. It must be discovered, permitted, financed, extracted, refined, and transported. Every one of those steps takes time. The world is discovering that physical resources don't scale as quickly as digital ambitions. Now let's examine demand, because this is where the story becomes even more interesting. Silver is no longer just a precious metal. It is an industrial metal. In many ways, it's becoming the invisible backbone of technological civilization. Silver is the most electrically conductive metal on Earth. That property makes it extraordinarily valuable. Solar panels consume enormous quantities of silver every year. Artificial intelligence data centers require vast amounts of electrical infrastructure. Electric vehicles use significantly more silver than conventional vehicles. Defense systems, aerospace technologies, and advanced electronics all rely on it. Even as manufacturers attempt to reduce silver usage through efficiency improvements, demand remains remarkably resilient because there are few perfect substitutes. One analyst summarized the situation perfectly. Every solar panel, AI server, and battery needs it, so demand is compounding faster than supply can realistically respond. The International Energy Agency expects enormous growth in renewable energy deployment over the next decade. That means more silver demand. At the same time, artificial intelligence is creating a second wave of electricity demand. And electricity infrastructure requires silver. This creates multiple overlapping demand engines operating simultaneously. If this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert, because the world is entering an era where strategic resources matter more than ever. History rarely repeats perfectly, but it often rhymes. Think back to the 1970s. Inflation surged. Energy prices exploded. Trust in fiat currencies weakened. Precious metals responded dramatically. Then came 2008. Financial institutions wobbled. Central banks unleashed unprecedented monetary stimulus. Again, investors sought hard assets. Then came COVID. Supply chains fractured. Factories shut down. Global logistics networks seized up. The world learned a powerful lesson. Efficiency is not the same as resilience. For decades, globalization prioritized efficiency. Now countries are prioritizing security. That's a major shift. History teaches us that when societies become overly dependent on fragile supply chains, governments eventually intervene. We've also seen episodes like the Silver Squeeze movement, where retail investors suddenly recognized how small and illiquid physical silver markets truly are. The lesson wasn't that silver would immediately skyrocket. The lesson was that physical markets can behave very differently from financial markets. Energy shocks, geopolitical conflicts, and supply disruptions all tend to expose hidden vulnerabilities, and silver sits directly in the middle of those vulnerabilities. History reminds us that periods of transition often create volatility. The question isn't whether change is happening, it's whether people are paying attention early enough. So who is paying attention? Smart money. Central banks themselves primarily accumulate gold rather than silver. But the broader strategic resource story is impossible to ignore. Institutional investors, family offices, sovereign wealth funds, and long-term asset allocators are increasingly focused on real assets. Why? Because debt levels continue climbing, government deficits continue expanding, currency debasement remains a long-term concern. Organizations like the IMF, World Bank, and U.S. Treasury have repeatedly highlighted growing fiscal challenges facing developed economies. Debt burdens limit future policy flexibility. At the same time, BRICS nations continue exploring alternatives that reduce dependence on the U.S. dollar. This isn't the end of the dollar, but it is a reminder that the global monetary system is evolving. Whenever confidence in fiat systems weakens, tangible assets often regain importance, and silver occupies a unique position because it combines industrial utility with monetary history. It's both a strategic material and a store of value. That dual identity is incredibly rare. If you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. Now let's bring this back to ordinary people. Because this story isn't really about silver, it's about purchasing power, it's about resilience, it's about preparing instead of reacting. No one can predict the future with certainty. No one knows exactly where silver prices will go next year. But understanding the forces at work allows people to prepare rather than react. The average person is exposed to these risks whether they realize it or not. Inflation impacts savings. Supply disruptions impact prices. Energy costs impact household budgets. Currency depreciation impacts retirement plans. The solution isn't panic, it's education. Diversification matters. Long-term thinking matters. Risk management matters. Patience matters. Wealth preservation isn't about getting rich overnight, it's about maintaining purchasing power over decades. Some people choose stocks, some choose bonds, some choose real estate, some choose precious metals. The key is balance. The people who navigate uncertain environments most successfully are often those who understand systems rather than headlines. Because headlines are temporary, systems are persistent, and the silver story is ultimately a system story. It's about energy systems, industrial systems, monetary systems, and geopolitical systems. The hidden silver crisis isn't a prediction of catastrophe. It's a signal that the world is changing. And those changes are accelerating. Markets move in cycles. Headlines come and go. But the laws of supply and demand never disappear. Silver sits at the crossroads of nearly every major trend shaping the coming decades: energy transition, artificial intelligence, grid modernization, debt expansion, geopolitical competition, supply chain security. Each one alone would matter. Together, they create a compelling story. Perhaps the biggest takeaway is this: the world is entering an era where physical resources matter again. For years, many investors assumed technology alone would solve every problem. But technology itself depends on physical materials, and physical materials remain constrained by geology, energy, and time. You cannot print silver. You cannot code silver. You cannot manufacture it out of thin air. You have to find it, mine it, refine it, and protect the supply chain that delivers it. Pay attention to the trends most people ignore, because sometimes the biggest opportunities emerge long before the crowd notices. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.